Hi, it's Fred Eckert with Chicago Title. I get a lot of questions from clients and from realtors about seller financing because they're trying to look for ways to make the property sell a little faster, particularly in this difficult market for financing. So here's a few things you want to know about seller financing. You have to have some equity. The more the better. Obviously, that helps. If you're owner-occupied or non-owner-occupied, that doesn't really matter, but you want to have some equity in the property. You have to be willing to accept a little bit of risk, and I'm going to cover that in a little bit. But here's the big keys for you and why the benefits are such. You start putting on your sign writer in the MLS that seller finance is available or seller would consider seller financing. I think you're going to get more buyers that are willing to buy because they realize they might be able to qualify with you a little easier than if they did it with the bank. So what do you have to do that? Well, you get a trusted advisor, an attorney maybe, to make up an agreement about what the terms are going to be for this note that you're going to be securing. That note is going to be a note secured by deed of trust, and escrow officers like ours and outside escrow officers can help with creating those once the terms are done. So what you do is you're going to check their credit. You're going to make sure you have their financials so that you know they can afford the property. And you're going to have a notice of default right. Now what that means, and you want to make sure that if you are loaning the majority of the money that you're in a first position, correct? So what you do is you have a notice of default right. So should they default, you can take the property back. It probably is not a bad idea to get some money up front if you can. It doesn't have to be 100% seller financing, although I know plenty of people that will do 100% seller financing. Again, that's your choice, but if you have questions about this, don't hesitate to contact me. I can give you more information about this. What are the risks? Well, they could not make payments, in which case you'd have to foreclose. So if you're not able or willing to take the property back, if they did foreclose, if you had to foreclose, that would be an issue. Although I think if you structure it right, get the right tenants, get the right terms, and make sure that you provide an incentive for them maybe to pay on time and so forth, maybe that's some sort of a discount. So you want to have a notice of default right when you're doing this. And you may or may not have to have it set up so who pays the taxes. Maybe until the notice paid off, maybe you pay the taxes. And I think you might find that a useful tool to maybe keep on top of things. So remember, it's doable on almost any property with any type of loan, and that currently exists. If you're willing to do the seller financing for it, you might have a short loan that you can pay off once they pay you and so forth. So if you have questions, don't hesitate to call me. I know it's a unique situation, and but in this market, you may find it very, very, very useful to help get your property sold. So again, questions, call me, 619-507-5688. Make it a great day.